Welcome back. You're still tuned into Midcap Radar. Mindspace REIT, that's the stock on our radar, reported their Q1 numbers, saw revenue surge by 18% on a YY basis. EBITDA was up 22% as well. Gross leasing, which is an important metric to track, was up 55% in the same period. Ramesh Nair, who's the MD and CEO at Mindspace REIT, is joining us now to discuss more and, most importantly, the outlook going forward. Ramesh, good afternoon. Thank you so much for joining in. Well, leasing this time around at 1.7 million square feet has been strong, a 55% uptick that you saw. What's the target for FY26? You saw good growth in FY25 as well. Will you surpass that, do better than that?
Thanks, Sonal and Vivek. Our gross leasing last quarter was 1.7 million square feet. Our revenues went up around 21%. Our occupancy today stands at 93.7%. We hope to take this to 95% by the end of this financial year. Our NOI is up 24% year on year last quarter, and distributions are up 18%. Now, why is all this happening? The market has been outstanding, phenomenal market conditions. Every quarter, we are seeing market breaking new records despite the global uncertainties. During that 3-4 weeks, when there was those big tariff wars and the India-Pakistan issue, those 3-4 weeks, we had seen a little bit of a slowdown in decision making. But in spite of that, this quarter, the overall market posted very, very good record numbers. Net absorption for H1 calendar year, again, it's an all-time high. Net absorption up 28%. Gross absorption, again, up 18%. Vacancy levels, we're talking of around 14.5%, down from around 17%. So all market conditions kind of looking at a good market for people like us.
And what's the outlook for leasing in FY26? You did 7.6 million square feet in FY25. Same number in FY26?
See, the leasing numbers were big for last year, mainly because we also had a lot of stock coming up. We had the data center pre-leasing, which we did, which is close to 1.1 million square feet. We had the R2 building in Pune, which was 1 million square feet, which is pre-leased to a global capability center. We had the B1 building in Hyderabad, which is 1.5 million square feet, which was again pre-leased to a big global banking GCC. So we need to have that stock to keep going up that way in terms of gross and net leasing.
Understood. So you mentioned, Ramesh, that stock needs to keep going up. So currently, what is the kind of occupancies that you're seeing across the portfolio? Any significant trends that you're seeing either geographically or sector-wise? And end of FY26, where do you expect that number to be?
So in terms of under construction, we have our B8 building in Hyderabad, which is around 1.7 million square feet. A lot of interest in that. Hyderabad market has gone through the roof. Rentals, which 1.5 years back were in the early 70s, has gone to mid to late 90s already. So that's an opportunity. We will start construction in Airoli for our B15 and B17 buildings very soon. We also have a B18 building in Hyderabad, which we are hoping to start construction soon. So as an experience center, again, 150,000 square feet. This is a big club facility, which we're doing in Hyderabad, which is expected to be completed in the next 2 months. So multiple things happening on the under construction capex side.
Okay. You're talking about under construction capex. What about the SEZ portfolio? How much of the portfolio has been denotified, I'm sorry. And what kind of occupancies are you seeing in that particular portfolio?
So as he said, we've converted around 2.3 million square feet. In that 2.3 million square feet, we've already leased around 1.6 million square feet. That's played in our favor. In a park like our Airoli West Mindspace Park, which we call Gigaplex, vacancies pre the demarcation rules used to be 72%. That's now become 92%. Overall, our Airoli parks, which used to have an occupancy of around 75%, is now become 85%. So we've been big beneficiaries of that demarcation laws. Today, government has been highly supportive. The paperwork is easy. You can get your space demarcated in as much as 45 days these days.
So when it comes to new capacity addition, Ramesh, are you waiting for this entire process to go through, or are you already have a strong capex plan underway? Which are the geographies that you're targeted? And in terms of the portfolio, end of FY26 and FY27, where do you expect to be?
So in terms of capex plan over the next 3-4 years, the spend is going to be close to 4,200 crores. This year, of that 4,200, we would be spending around 1,200 crores on capex and around 200 crores on upgrades. Growth is going to happen both organically and inorganically. Like I mentioned, redevelopment, which we are already doing, B1, B8 in Hyderabad, that's happening. Data centers, we are putting up close to 1 million square feet again in Navi Mumbai. With that, our data center portfolio would be 5 data centers, so 3 under construction and 2 already operational. From a growth perspective, on an organic point of view, there's close to 7 million square feet, which is either under construction or development pipeline. We have close to 2 million square feet vacant area, which is spread out across the country, which we need to lease. We also get mark-to-market rental growth and contractual escalations which happen. Inorganically, our sponsor has close to 18 million square feet, a lot of which we have ROFOs on. So acquisitions from the sponsor group would be a big growth driver for us. We're constantly looking for third-party acquisitions. We just did one, 800,000 square feet in Hyderabad Financial District. And we also look at consolidation within our parks, wherein smaller spaces available, which landlords want to sell, we end up acquiring it. So many strategies at play for both growing organically and inorganically.
Got it. Got it. Thank you so much, Ramesh, for joining in. Always a pleasure speaking with you. Thank you for telling us about Mindspace plans going forward and a lot more. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.